This is The Bottom Line. The Bottom Line on 938 Live.
London's scandal-hit gold fixed price process is set to be modernised following a forum by the World Gold Council last week. Now, delegates agreed that more financial institutions should be involved in the price-fixing process as well as having a more transparent process. At present, price is determined through a conference call twice every business day in London by 4 members of the gold-fixing company. Investment analyst at Phillip Future, Howie Lee, tells Travis Teo that any reforms will have little impact on the commonly quoted spot gold price.
But there's a difference between gold fix and spot gold. While we understand that spot gold still revolves around the gold fixing price or vice versa, but at the end of the day, gold prices are still based very much on demand and supply as well as its demand for being a safe haven asset. So we will expect the impact of it to be limited, but definitely we will see some changes going on in the market.
Some analysts as reported, are expecting gold prices to be higher due to the fact that the gold benchmark reform is going place in London, and that will lead to more transparency within the gold fixed price. So what do you think? Do you agree with that?
Well, I would think that there is definitely some truth in that, but I would think that that hike is temporary and it will not be long-lasting. I would think that there are really many more factors to be concerned over, such as the uncertainty in the Middle East and in Russia, and then you're looking at the US not recovering all that well. I think those factors would come into play more so than the impact of changes to gold fixing.
Right, so going forward into the second half of this year, what are some of the factors affecting gold prices?
I would think that its demand for being a safe haven asset is still one of the primary factors that the investors are looking at. So, of course, the Ukraine crisis definitely not over. Randomly you have incidents like Russia, who has allegedly cut gas supplies to Ukraine. And then on the topic of energy, of course, if you take a look at Iraq, there's still a risk that remains that these militants might capture oil fields. And then as well as, the dollar just being soft because the Federal Reserve is saying we're going to keep interest rates low. Yields are not picking up, so dollars not picking up, and that would push the price of gold up as well.
The unrest in the Middle East and the Ukraine crisis, how is that affecting gold prices?
Well, traditionally, gold is a safe haven asset. So when there is fear in the marketplace or when investors are taking risks off the table, they would rotate their funds into assets such as gold or yen and to some extent silver and platinum. So the more uncertainties there are in the world, the higher the price of gold will go up.
Right, I see. And what is your forecast going forward for the next 3 months, let's say at the end of September, and also for the next 6 months at the end of December?
In the third quarter, I would think that prices should tend to trend upwards. So I would think that they would face a huge resistance at about 1,390. But going to the fourth quarter, as we see more solid evidence of the US recovering, that should drive prices of gold downwards. Could go as low as 1,250 by end of the year.